Hello folks, and welcome back to Federal Employee Benefit Advisors Facebook page. We're going to continue our series concerning life insurance. Last two segments we talked about Federal Employee Group Life Insurance Option B and also Basic, known as Regular. And so I'm going to step away from that for this segment and talk some about commercial life insurance, because I know we reference that quite a bit when we talk about Federal Employee Group Life Insurance. So I want to spend a little bit of time on that today and help you understand what's available to you outside the federal system. On these videos and a lot of the flyers that we mail out and so forth, we talk about replacing FEGLI. So I think it's important to discuss some of those benefits so you'll have a better understanding. Now, with commercial life insurance, in most cases, you are going to be required to have an exam to qualify. One of the benefits of Federal Employee Group Life Insurance is the fact that you do not have to have an exam. If you're an employee, you automatically qualify for it, but that's also why there are so many problems associated with FEGLI, with the costs and the fact that it's designed to go away and so forth. With commercial life insurance, there are primarily four categories, and some of you have probably heard of these categories. One is whole life insurance, universal life insurance, indexed universal life insurance, and term life insurance. Now, we will have some videos as time goes on about all these different types of life insurance policies, but the one that I'm going to key in on today is a universal life policy, and it's also known as a GUL, or Guaranteed Universal Life Policy. Now, what does the guarantee mean? Well, the guarantee covers some different aspects of that type of life insurance policy. Number one, the life insurance policy is guaranteed by the insurer. Okay, so they're going to guarantee that it's in place. Number one. It's also going to have a guaranteed minimum rate of return. That's usually in the 3% range. And it's also guaranteed not to lapse as long as you don't live past age 120, which we discussed a little bit in a previous segment. And your premiums are guaranteed to never go up. Now, life insurance pays out a tax-free death benefit to the beneficiaries. I think we all know that. That goes without saying. But for a lot of people, that's as far as it goes. They think about life insurance, I make a premium payment each month or on an annual basis, and then someone else benefits from it. My beneficiary or beneficiaries benefit from it. Well, that's not the case. So again, let's dig into this GUL, or Guaranteed Universal Life Policy, and let's talk a little bit more about that. Of course, we're going to have a tax-free death benefit. That goes without saying. But it goes a step further and covers you for other possible issues that may arise down the road. Now, many of you may own a long-term care policy. Now, personally, I am not a fan of standalone long-term care policies. And the reason I'm not is because, number one, they're very costly. They are use it or lose it, which means you could pay into it for years. If you don't use it, and guess what? You hope you never have to use it. If you don't use it, then the premiums are gone. Okay, you don't get any of that money back. The premiums can go up over time. There's no cash accumulation. It is not multi-generational, so it's very limited. And let me say this, there is absolutely no reason for anyone in today's modern guaranteed universal life age, there's no reason for anyone to purchase a standalone long-term care policy any longer. There's no reason for it. And the reason is because with these guaranteed universal life plans, again, besides the death benefit that's associated with that plan, it also has living benefits. Okay, so what do I mean by living benefits? Well, it means that you, as the policyholder, the person that the policy is written on, you have benefits or you can derive benefits from that policy while you're still alive. You don't have to die to get benefit. Okay? So since we just spoke about long-term care insurance and long-term care coverage, let's talk about that as it relates to living benefits within this GUL policy. Well, one of the living benefits, and there happen to be 4 living benefits available, one of those living benefits is long-term care benefit. So let's use an example here. Let's say that you have a GUL and the death benefit is $200,000. Okay, so let's use $200,000 as the death benefit. And you get into a health situation that requires long-term care assistance either in your home or at a facility. Well, isn't that what long-term care insurance is for? Yes, it is. But what I mentioned earlier is that you don't really need to have a standalone long-term care policy anymore because the long-term care benefit is built into this policy. So it's not a use it or lose it proposition. Because if you don't use the long-term care benefit within this policy, then you have other living benefits as well that are available to you, which we'll discuss. But, of course, the death benefit is going to pass on to your beneficiaries tax-free. Now, tax-free is a common thread or a common theme throughout life insurance. Why is that? Because all benefits from life insurance are tax-free. Now, many times when I visit with someone about that, they look at me kind of funny because we've been trained in our society to think that every single thing that we do is taxed. Your fuel is taxed. Your groceries are taxed. You have sales tax on everything, vehicles. Your fun is. Everything is taxed. Well, the fact of the matter is there are 2 financial products or investments, I guess we could say, that are tax-free when they're used. One is our Roth IRA accounts. Not going to get into it today, but keep in mind the value in the Roth TSP. If you have a TSP and you're contributing to the Roth side of the TSP, when you take that money out in retirement, it is tax-free. Well, any benefit that comes from life insurance, whether it be FEGLI, whether it be a commercial policy, is tax-free. So the death benefit is tax-free to the beneficiary, and the living benefits that you utilize while you're still alive are tax-free. So this long-term care benefit is a tax-free benefit. Well, how does that work? Well, to qualify to utilize the proceeds from a long-term care policy or the long-term care benefit within this policy, you have to have lost 2 of 6 ADLs. Okay, well, what is an ADL? That's an activity of daily living. So if you're, or any physician that you utilize declares in writing that you have lost 2 of 6 activities of daily living, which are mobility, the ability to feed yourself, the ability to clothe yourself, and so forth. If you lose 2 of 6 activities of daily living, then the long-term care benefit within this policy can then be activated and can supplement the cost, paying the cost of long-term care, whether it's in your home or at a facility. Now, it is a percentage of the death benefit. So you will be able to actually take cash out of the death benefit, tax-free, for the long-term care costs. Now, this is a dollar-for-dollar reduction on the life insurance. So, as an example, you can take up to 24% of this death benefit per year. So you can take up to 24% of the death benefit per year, which in this case would be $48,000 a year, up to $48,000 per year, tax-free, to apply to long-term care costs. So it works like this. Let's say you were in a long-term care facility, or let's say you're receiving care at home, doesn't matter, and you had a $5,000 long-term care bill for whatever period of time. It doesn't matter. It could be a week, a month, 2 months, 3 months, whatever. And you decided, well, I don't want to pay that out of pocket. I don't want to pay that out of my assets. I want my life insurance policy to pay for that. It's real simple. Complete the form for the insurance company, fax it, mail it, email it, whatever. They're going to send you a check for $5,000. And with this policy, again, 24% of the death benefit, and of course, the higher the death benefit, the more coverage you're going to have. But then if that $5,000 scenario were to take place, then you would have $43,000 left that year to apply towards long-term care. So on the anniversary date of your policy, it goes right back to zero, and you can go right back up to $48,000 a year. Now, if you used the benefit every day until you maxed it out every year consecutively, then it would last for 3.5 years, this benefit. And you would have $15,000 left over in death benefit. The insurance company is always going to make sure you have $15,000 left over as a death benefit. Well, we know what that's for. That's for final expense, right? Cost of funeral, etc. So this is the long-term care benefit. Again, it's not use it or lose it. The premium will never go up, and it's dollar for dollar from the death benefit. Let's say that you do utilize this. Let's say you utilized $100,000 of that long-term care benefit. Well, you still have another $100,000 that you're going to be passing on to your beneficiaries, tax-free. Okay. Now, the next living benefit would be for critical illness. Okay. This is what's known as a chronic illness rider. The long-term care benefit is also known as a chronic illness rider. We also have the critical illness rider. The critical illness rider is based on a percentage of the death benefit, and you can utilize up to 25% of the death benefit over the life of the policy. This is not per year, over the life of the policy. So in this case, you would have $50,000 available to offset costs associated with a critical illness. Well, what is a critical illness? A critical illness would be heart attack, stroke, organ transplant, kidney failure, a bout with cancer. Any costs related with those health issues, again, if you have a bill left over, let's say you have some deductibles after your health insurance pays, or after Medicare or whatever health insurance you have, let's say you have some deductibles sitting on the dinner table. Let's say it's $10,000, and you say, well, you know what, I don't want to pay for that out of my cash reserves. I'm going to take it from my death benefit. It's going to be tax-free, and I'm going to take care of it that way. No problem at all. You send the bills over to the insurance company. They're going to cut you a check for 10 grand. Your death benefit goes down 10,000, so it would go down to 190,000 in this case, and you have that tax-free benefit to take care of that cost. So that's the critical illness rider. The other living benefit that we have associated with this is a terminal illness rider. The terminal illness rider allows for you to take up to 75% of this death benefit out while you're still alive, again, living benefits, if you're declared terminally ill and have 12 months or less to live. So if the doctor signs off on a death warrant and you've got 12 months or less to live, then you can take up to 75% out of this death benefit tax-free. Now, these living benefits are also known as accelerated death benefits. You're accelerating the death benefit for your use while you're still alive. Now, finally, on living benefits, and in our next segment, we will talk about index ULs, and we will talk about whole life, because those two policies lean more towards cash accumulation. But the other living benefit that you have is tax-free income. Now here I am back with this tax-free information again. Well, the fact of the matter is, any cash that accumulates in a life insurance policy, you can utilize that cash value tax-free. Now, again, I know when I discuss this with folks that it's new to them, they have a really hard time absorbing that or understanding that because they think everything is taxed in our society. Well, again, any benefit from life insurance, whether it be long-term care benefit, critical illness benefit, terminal illness benefit, death benefit, cash value, it's all tax-free. Okay, so you can utilize the cash in a policy tax-free. So hopefully this helps you out. Folks, feel free to give us a call. Our main number at the office is 417-429-0331. If you'd like to talk to one of our FEGLI specialists more about Federal Employee Group Life Insurance, get a complimentary quote with no obligation. It can be emailed to you, it can be mailed to you, whatever. And we'd be more than happy to take care of your insurance needs here at Federal Employee Benefit Advisors, no question about that. But you would want to go to extension 317. So that number is 417-429-0331. I know the phone number is on our Facebook page, it's on our website and so forth. Go to extension, or hit extension 317 when you call in. That'll take you to our FEGLI department. You'll be able to speak with one of our representatives there. They'd be more than happy to help you out. So don't forget, it's the good, the bad, and the FEGLI, and we can take care of that for you.